Hello, I'm Steve Wilson, Managing Partner of Sound Money. I'm pleased to have Detlev Schlichter with me, former international bond trader, fund manager, economist and author of the book Paper Money Collapse, a book that explains our current financial system and why it's destined to fail in spectacular fashion, ushering in a return to some form of gold standard. Welcome, Detlev.
Thank you very much.
Thank you for coming this evening.
My pleasure.
Detlev, in your book, Paper Money Collapse, you talk about a coming monetary breakdown. Do you think that we're in the breakdown period now? Do you think it's commenced?
No, Steve, I don't think we are quite there yet. I think there is still a lot of confidence out there in the system. In my book, I describe a couple of stages, as we approach the end game. I do think the end game is inevitable. I do think our fiat money system that we created over the last 4 decades is ultimately, unsustainable, and we are in the end game. And I think the reason is two of the almost final steps are what I call the nationalization of money and credit and debt monetization. And both we're already seeing. We're seeing the government is playing an ever larger role in financial markets. Central banks around the world are now at a point where they establish zero interest rates to keep banks alive and in business. And they begin to manipulate and have a wider range of financial assets. They're practically manipulating the entire yield curve through quantitative easing or other measures. All central banks are using their own balance sheet to buy assets and keep their prices artificially high. All these are already signs that we are very close to the end game. I expect in the near future that these measures will continue. They will even be enhanced and expanded. I think at some stage people will lose confidence in the system, and that's, I think, when we get closer to the breakdown. When this will be, nobody knows.
No. Do you see a particular tipping point?
Yeah, I think the key point is confidence. And right now, policymakers and central bankers in particular are in a way buying that confidence with cheap money. They are, as I said, manipulating the prices of various financial assets, encouraging banks and other financial institutions to put on these carry trades to fund themselves cheaply with a central bank and then buy these various assets. I think in a way, once the public is concerned about the value of their money, the purchasing power of money, or is getting more concerned about the solvency of the state, then I think the market will ask for higher yields, for higher interest rates, to compensate people for these risks. And it's very clear that the present system cannot cope with higher interest rates.
No.
Central banks are artificially suppressing these yields and these interest rates. So when the public loses confidence, will sell bonds, will ditch some of these financial assets, then the central banks have to buy even more of them. And I think at that point, it will be very difficult to keep the system together. So a key point is concern about inflation, concern about the solvency of the state. Right now, the private market still seems to be willing to go along with what policymakers want them to do. As I said, it's difficult to say when this will break. I do think it's ultimately unsustainable. That's my point.
Right.